Oh man, we are back live. We back live. What's up, man? So amazing to see you guys. I'm excited and pumped up as always. Man, I've been getting so many questions and so many requests. There's something else coming in. Talking about debt collectors. Man, I've been getting so many requests. And man, I just wanted to tap in with you guys just to answer these questions. And so the name of this video is going to be titled, I'm sorry, let me introduce myself. For those of you guys who may not know me, my name is Jerron Tyler, founder of Posterity.ai, AI-powered business credit software designed to help you maximize your business credit and business funding as a whole. Whether you're talking business credit cards, business lines of credit, auto loans, CDFI loans, SBA loans, whatever you want to go with regarding business funding, this is what we do. And so we created the software to help democratize business funding as much as possible to make it accessible to any and everybody that would step into entrepreneurship. And so with that being said, we also assist clients along the way with our Done For You funding service. For those individuals that do not have the capacity or want to go out and get their own funding, we help and assist with that as well. And yeah, so with that being said, this particular video today is titled 25 business questions answered. These are like the top 25 questions that we get all the time. And so what I'm going to do is I'm going to go through and I am going to answer them. We'll answer 25 questions. And from there, we're going to keep it moving. So here we go. Let me actually pull them up because as they were coming in, I was actually making a list of all of them just so that we could flow in abundance. That's what we like, baby. We like abundance. All right, so let's take it from the top. Okay, so someone reached out and said, Jerron, my personal credit. Let me actually turn my music down. I'm in the office. I'm worshiping, I'm working, I'm talking to clients, I'm doing videos. I got so much going on. But they said, Jerron, my personal credit is only a 640. Can I still get approved for business funding? All right, this is a two-part answer. So ideally, in the perfect world, all right, in the perfect business credit underwriting stratosphere, you want to have at least a 680 at minimum. A 640 will not particularly do when you start talking about business credit cards and business lines of credit from direct banking institutions. However, if you have under a 680, and let's just say you do have, just like this lady reached out, let's say you do have a 640. A 640 can still get approved for something. What I always tell people is that no matter what state or situation you're in, if you have an LLC and if you have revenue, someone will approve you. The question that you want to ask yourself, or the better question that you want to ask yourself, is what will the terms be? Right? What will the terms be? Man, there's a book that I'm reading right now, and the author said, man, better questions oftentimes give you better answers. And so here is the better question in this scenario. Yes, I can go and get approved for funding, but at the end of the day, what will my terms be? Will I have a super sky high interest rate? Because if I have a sky high interest rate, then it may make sense for me to move forward with funding, or it may not. But again, in the ideal perfect world, in order to be able to qualify for any and every product, right, you want to be above that 680 threshold. And so I would spend a lot of my time, if I were you as an entrepreneur, figuring out and navigating how I can put myself in the absolute best position to go out and get the maximum amount of funding. Now, what does that look like? Well, I want to put a lot of time into my personal credit. I want to put a lot of time into that. I want to make sure that I'm in a situation where I have collections reconciled, where I have late payments reconciled, where I have charge-offs reconciled. I want to be able to put myself in a position where I can go out, and because my credit is so solid and so strong, that I can go out and get approved for the business credit card and the business line of credit and the business auto loan and all of these different items, so that ultimately I can have it off of my personal credit report. All right, next question. This is a phenomenal question. What is the difference between a business line of credit and a business loan? All right. A business line of credit is a pool of money that you can tap into, and you can constantly use this money on a recurring basis. Jerron, what do you mean by that specifically? What I mean is that if you have a $25,000 line of credit, then that $25,000 line of credit is reusable. All right. It is reusable. So if you have a $25,000 line of credit and you pull 5 from that line, that would give you a $20,000 balance. But then you put that $5,000 back. Well, guess what? You can go back and you can use that $25,000 again. Unlike a business loan, you only get the cash one time and you utilize it that one time. And so if I get a $25,000 business loan, they pay me out that $25,000 in a lump sum, and then they set me up on scheduled payments every month. Well, once that balance is paid off completely, then I no longer have ties with that loan. But if I have a business line of credit, then that business line of credit affords me the opportunity and the luxury to now reuse that. And so the only thing I have to do with a business line of credit is I have to make sure that I am in a situation where I am honoring my commitments. This is my definition of credit. Pay who you say you're going to pay and honor your commitments. If you do those things, then you will be A-okay. You don't have to worry about severing ties or having a bad relationship with anybody if you just honor your commitments. Amen. Hallelujah. Amen, 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 amen. All right, so this is actually a jam-packed question right here. And because the question is so jam-packed, I am going to actually see if we can get busy on the board, because this is a super jam-packed question right here, man. This is a question right here. Good Lord, we might be here all day with this type of question. Now, we ain't gonna be here all day, but listen, I got a question for you. And if my board is working properly, we're gonna go ahead and get busy. Wow. Oh, yeah. Yeah. Oh, man. I'm excited right now. The board is active. Oh, yeah. We're going to have a lot of fun. I'm telling you. If you on right now, man, tell your friends, your best friend, your mother, your cousin, your father, your husband, your wife to subscribe, baby, because we get ready to go all the way up, baby. All right, so here is the question. The question we have here is, this is the third question we have. They reached out and they said, Jerron, how do banks actually decide whether they're going to approve or deny a business owner? There are some very key components that I want to share with you guys. I have this equation, if you will, man, set up, and it's called 31 Gets It Done. And through my analysis, evaluation, and my experience in business funding, with me being able to garner and amass over $1 million in funding, this is what we came up with. There are 31 concepts and ideas that your business should at least be aware of prior to going and getting funding. And so I'm going to go through a few of them, but this is what banks are looking at. This is not the only thing, but this is just a piece of the pie that banks are looking for when they start talking about approving or denying. And so when they're looking at if your business is worthy of approval, the first couple of things that they're looking at is they're looking to see, does this business have a business email address? Does this business have a business phone number? Does this business have a business address? Not just your home address, not just a PO box. Do they have a business address? A virtual address is acceptable. But let me tell you this, a PO box is not acceptable. Let me go put that in red. The next thing that they're looking at is they're looking to see, let's go green. Does this business owner have at least a 680 to 700 credit score? Does this business owner have a healthy, I created a video and put a video out on this. It's called the video is called the Perfectly Healthy Credit Profile. Do they have a healthy credit profile? Jerron, what do you mean by a healthy credit profile? Well, do they have at least 5 to 8 positive personal accounts? Jerron, what's a personal account? A personal account could be a house. A personal account could be a car. A personal account could be a personal loan. A personal account could be a credit card. Watch this. Even in the midst of that, a personal account could be a student loan. But do you have at least 5 to 8 positive personal accounts? The next thing that they're looking at is they're actually looking at your debt. Now, one of the things that you want to know is when you're utilizing debt, you want to keep your utilization low. So a bank will go in and they'll look at your utilization. Let's just say you come through and you have a Bank of America card and you have a Wells Fargo card. And then you also have a PNC card and you have a $20,000 limit. You have another $20,000 limit. And then you also have another $20,000 limit. Well, guess what? Looking at both of these or all three of these, you have $20,000 limits. We get it. Congratulations. This is dynamic and incredible. However, the issue comes in when you have $20,000 balance, $20,000 limits, but then you have $19,000 balances. $19,000. And so what's happening is on all of your cards, you're practically in a situation where you're 99%, almost 100% utilization on your cards. Now, again, this is something that banks are looking at because when they come through, the whole mission of the bank and of the underwriter, all lending is based on risk factor and capacity. And so when we look at capacity, if you go and ask somebody, hey, can I borrow $100,000? They say, yeah, I would love to give you $100,000. But the reality is I don't have it, which means I don't have the capacity. The next one you're talking about is risk factor. They're looking through your profile. They're analyzing. They're doing a deep dive interrogation to see if you have the ability to repay. That is it. If you can prove it, not saying it, you're not speaking it by faith, you're not just articulating it, but can you actually tangibly show that you have the ability to repay this loan, this line of credit, this credit card? If you have the ability to repay, then that puts you in a situation where you are now credit worthy. And so these are the things that the banks are looking at. The next thing that a bank is looking at is they're looking at the industry type. Are you in a high risk industry? High risk industry. Are you doing something like real estate? Are you doing something like trucking as a beginner? Are you doing something like gambling? Are you doing something like construction? Now, let me just set the record straight for all of these industries. Every last industry out there can get funded. There is no industry in the world that can't get funded. But what happens is when you have a high risk business, that business then gives you a more challenging time at going to get funding, right? And so it's a more challenging time, right? Like if I'm in trucking, right, I can't just go directly to the bank right outside of my house or right outside of the. I can't go to any bank in the country and get funding. I have to go to a specified bank. And so, with that being said, that's something that you guys want to keep in mind as well. You may have to go to an alternative bank, right? You may have to go to a private money lender. Like there's different ways that you can go. Even if you're just starting out in real estate, you can go get funding, right? You got hard money loans, right? But it would not be wise for the bank to just give a brand new entrepreneur who is just starting out, $50,000. And there's so many things that have to be played or taken into consideration with that alone, right? A brand new business owner, a brand new real estate investor, a brand new truck driver, whatever the case may be. I'm just going to give you 50 grand. I have to not only am I looking at the money, but I'm also in a situation where I have to be able to gauge and monitor like your entrepreneurial skill set. Like, how do you handle challenges? How do you overcome issues? How do you leverage? How do you build? How do you share? How do you do these things, right? And so with that being said, these are the things that you have to consider. What's up, my friend? I see y'all live over here. Let's go. All right, so these are the components that they are looking at. Another thing that I want you guys to keep in mind, because again, what we do is we look at the whole approach, the whole holistic spread of business credit and how to go and garner money. There's a situation or there are instances where you'll be in a season where you can go get business credit cards, you can go get lines of credit. You can go get lines of credit, but you can't quite get a loan yet. You can't quite get a loan yet, but maybe you can get a grant. You can't get a grant, but maybe you could go borrow some money from a friend. Right? You can't borrow money from a friend. Maybe you go out and make more sales, right? There is always a solution. This is my perspective. I got this from the scripture. This is revelation that God gave me from the book of James. James says, "Count it all joy, my brothers and sisters, whenever you fall into various trials, knowing that the testing of your faith produces patience, but let patience have its perfect work, that you may be perfect and complete, lacking nothing." From that, man, the Holy Spirit gave me revelation that said, "Jerron, for every problem in your life, I want you to write down 3 solutions immediately." Right? So we are solution based, right? We're going to amplify the solution no matter what space or what season we're in. We're always going to figure out an opportunity or a way that we can win. And one of the ways that you can win in business, because a lot of people in business have money problems. Let me show you how to overcome your money problem. Increase sales. Let me show you how to overcome your money problem. Get in front of more people. Let me show you how to overcome your money problem. Become a better communicator. Let me show you how to overcome your money problem. Never take no for an answer. Let me show you how to overcome your money problem. Go in and stare. I heard a wise man say, man, you get that greatness comes out of things that you stare at. You have to stare at it. A lot of us have low-hanging fruit. A lot of us have, treasures that are hidden right in plain sight, right? So there is no lack. There is no lack. I don't believe in lack. I don't subscribe to lack. I don't receive lack. I receive abundance in the mighty name of Jesus. And so I say all of that to say, one of the other things that you must do is that you must absolutely map out a clear business plan for your business, because when you're going out for funding, there are different levels and different tiers of funding. But there's some funding, man, well, we may be talking about like grant funding, where you have to be more articulate or more communicative about your business than others, right? If you're going for a grant, there is a very thorough process that you have to go through. You have to be able to explain the mission of the business, the purpose of the business, the goals of the business, the trajectory of the business, who you're going to help in the community with the business, how many staff members you have, how this money is going to help you better bring change and implementation and impact to society, right? Whereas if you're going to get a business credit card, you don't have to do all of that. Right. So another thing that I want you guys to write down when it comes to approval or denial is just having a airtight business that you can articulate. Not people coming to you saying, "Hey, well, what is it that you do?" And you like, I don't know. Or we do this, we do that, and we can help you with this, and we can help you. No, can you say it with a sound in a sound bite? Like, can you articulate it and communicate it to a point where a third grader can understand it? Right? I heard a wise man say, you should think like a genius, but communicate as if you're communicating with third graders, right? Because you want to make it simplistic. All right. Now, when we come here, another thing that you guys want to consider is you want to consider your business's website. Okay. Now, I had a bank reach out to me before. They said, hey, Jerron, they said, we want to approve you, but prior to approving you, we want to see your social media. Right. This is why I am absolutely against. I was against it even prior to this, but keep profanity off of your social media. Keep all things that are not speaking to the professional man or woman that you are off of your social media, because it can and will cost you 5, 6, and 7 figures in funding. I know there's some people online. I know there's some people that you probably know that are successful in business and they say whatever they want to say. Man, congratulations and God bless them. But coming from the desk in the studio of Jerron Tyler, I'm going to tell you to refrain from anything that causes you to look less than the consummate, God-driven, divine professional that you are. Keep it tight, keep it professional. You are a consummate professional. Amen. All right. So you want to make sure that your website is absolutely in alignment. All right. Now, the other absolute basic things that you have, obviously you got to have your EIN if you are in business. You also want to have access to your DUNS account, right? Now, this is not an absolute must, but if you're somebody that is in business, a DUNS number is free, right? A DUNS number is free. So if you're in business and you're a full-time entrepreneur, you are working a job right now and you're looking to get into entrepreneurship, I don't see any world where you wouldn't have a DUNS number. Again, it's free. Build out your business so that it's strong, so that it's firm, and it puts you in the absolute best position to go out and garner the capital that you need. There's nothing better or nothing worse than an unorganized, unprepared entrepreneur. So these are things that you want to keep in mind. Next component that I want to get to answering this same question. All right. They said, well, what are some of the things that banks look at or look at to either approve you or deny you? All right. Next piece I want to get to is where it really counts and really matters, right? Again, this is what I can't stop saying this. When you have credit and you have income working for you, there's nothing that can stop you. Credit and income. This is our credit, income. Right? I have credit and income both working for me. What can stop me? But some people only focus on credit with no income. Then some people only focus on income with no credit. Right? But if you have both of them working for you, you can do what my old manager used to say. He said, man, once you have these things working for you, you can pick, choose, and refuse. You don't have to worry about anybody trying to manipulate you or shift you in any one which direction because you're free. You don't need anybody for anything because you have the credit and the capital working for you. Now, with that being said, one of the things that institutions will begin to look at the deeper and further you go in business is they're going to look at revenue. They are going to look at your revenue, and your revenue tells all. This is the thing that I love about business because you have the power and the control in your hands. You could become a better marketer. You could become a better communicator. You can become a better networker. You can become a better salesperson. You can market your business, especially in today's time. You could have done it all times, but the way the media is right now, you can market your business 25 hours a day. You can market your business 50 hours a day, baby. You got 9, 10, 15 social media platforms. Man, you can delegate, you can create content, you can post, you can write articles on TikTok, on LinkedIn, right? You can market on TikTok, Facebook, Instagram, YouTube, shorts, long forms. There is no limit on it. So one of the things that I would recommend is that you begin building a system where you become the authority in your space. You become the authority in your space, and instead of going out and running and chasing people for leads or for business, now you have an overwhelming amount of leads for your business, right? And again, I heard a man say, if you have money problems, then you have one solution in that realm. That is to make some more money to solve your money problems. Then you no longer have money problems. And so what you want to do is you want to hyper focus on that revenue. And revenue is so simplistic, right? There's the law of the seed. Whatever you put in the ground is going to come out. But the beautiful thing about the law of the seed is what you put in the ground doesn't come out the same way. What you put in the ground comes out even greater. And so through your marketing efforts, this is all right. I'm gonna get back to it, but this is one of the things that I want you guys to know because they both coincide. All right, I can talk to you about funding all day. I can literally do a business funding mania for 24 hours straight. Matter of fact, we might do that. That's a great idea. Yeah, business funding mania, man. 24 hours straight. Good Lord, of straight. Wow, I need to write that down. I like that idea. Yeah, business funding mania. We're going 24 hours straight, man. Why not? Why not, man? Why not? Business funding mania. Yeah, I got to write that down. Business funding mania. 24 hours, baby. So, with that being said, you want to hyper focus on your revenue. Now, revenue, the simplistic part about this is that all revenue is based on inputs. So your inputs affect your outputs. Your outputs are affected by your inputs. So, for example, I could look at my numbers and say, hey, when let's say we're doing email marketing. If I'm doing email marketing and I say, hey, if we send out one email every day for 7 days or for 30 days straight, 30 days worth of emails generally equates to about $30,000 in revenue, right? I can see those metrics as the months go along, right? And so I say, hey, well, if 30 emails a month equates to $30,000 in revenue, then what if we did 60 emails a month? Would that potentially equate to $60,000 in revenue? Who knows, right? But again, you can look at your metrics. You say, okay, well, I want you to begin gauging how your revenue came in. Take a look at how your revenue came in. Did it come by way of email marketing? Did it come by way of referrals? Did it come by way of social media? Did it come by way of speaking on more panels, doing more conferences, doing more YouTube shorts, lives, longs? Like, where did your clientele come from? And wherever it comes from, I want you to do more of that. I'll give you guys an example. I wrote a book. I wrote this book called 100K in one day. I wrote this book and I actually launched it. We're actually coming up on the anniversary. So we're probably going to do, well, not probably, we're going to do a acknowledgement of it, right? I wrote this book and I did a live call. I did a live call with this book. And after that call, we made $850 in just 1 hour, right? $850 in just 1 hour. We didn't run ads. We didn't, do a crazy, ridiculous marketing campaign, but we did promote it, right? And so I'm saying that to say, if I'm ever in a situation where I say, hey, man, we want to draw in, we want to create more revenue, then it's just sticking to the thing that has made you revenue. So back to the point. All right, they are going to look at your revenue. Now, you have products called no doc funding, and then you also have doc funding. Now, no doc funding simply means that you do not have to show a profit and loss statement, you do not have to show bank statements, you do not have to show tax returns, and you do not have to show a balance sheet. This is what no doc funding means. It means that you do not have to show documentation of any income, right? But then you also come here and you have what's called doc funding, where doc funding, oftentimes they want to see tax returns, or at minimum, they want to see bank statements. Right. And so if you can show somebody your bank statements, no matter what your situation is, there are lenders. We help clients all the time garner funding from lenders who only have 630 credit scores. right? They only have 625 credit scores. They have a 615 credit score. There are lenders that we are connected with and partner with where we can go and get you money, right? But at the end of the day, again, it's about the terms. It is about the terms, but they're able to get the funding because they have ample enough income. They're making $10,000 a month, right? This is what my recommendation would be, especially for anybody in 2026, 27, 28, 29, 2030, baby. Let me tell you, man, I get so pumped up about this stuff. This is what I do all day. I'm just reading books on finance and business and watching videos and reading articles and reading the word and teaching and coaching and training and doing business, right? But the way where we are right now, I would not recommend anybody get into business, if especially as a full-time entrepreneur, and aim at anything less than six figures. Let me tell you, that makes no sense on no level. It makes sense on no level, right? At the rate of inflation right now, at the rate of the economy, at the rate of interest rates, at the rate of the cost of living for you and your adult family, that makes no sense for you to go out and do this quote unquote super ultra hard thing and invest all of your time and energy and efforts and money and reinvesting and paying for this and paying for that to go out here and say, man, I just want to make, 40 grand. That's it. That makes no sense. Like, you're going to be out of business very fast with that mentality, because at a bare minimum, literally the black and white numbers, you cannot afford life right now. And so you want to at least strive at bare minimum, man, 6-7 figures, right? That puts you in a situation where economically you can be stable, you can be comfortable, and you don't have to live life boxed into a corner hoping that nothing bad happens, right? And so that's what you want to focus on. You want to focus on that piece there. Now, again, $10,000, $15,000, $20,000. I don't know if you guys saw, but I posted it yesterday. One of our friends of the community reached out and said, man, JT, man, thank you so much for helping me, man. I appreciate you, man. I just got a $20,000 increase. I got a $20,000 increase on the line of credit, man. Thank you for helping me get started, man. To God be the glory. She's in business. She has a trucking company. She has a transportation company, right? She also has a nonprofit. You need to be able to put your hands on that capital, okay? So that is the component there, right? So these are the things that they are looking at when they're looking at whether we're going to approve you or whether we are going to deny you. Now, the next one we have here is, our next question is, wow, this is a really good one as well. So, Jerron, I've been in business for 6 years now. However, I've never applied for funding. What are some of the biggest mistakes that entrepreneurs make before applying for funding? Wow. So one of the biggest mistakes that entrepreneurs make is that they try to go and get funding before they actually build out their personal credit profile. Your personal credit profile is just as important as your business profile, right? And so a lot of times people will try to go out and get approved for $50,000, $75,000, $100,000, but they only have a $3,000 credit card on the personal side. Banks operate off of comparables. And so if I'm in a situation and if I'm a bank underwriter and I'm reviewing this, I'm like, okay, you've only ever had a $5,000 personal credit card with PNC. Why would I give you a $75,000 Truist business credit card? You haven't shown yourself to be worthy yet, right? So that is a mistake that people make. They try to go and get business funding too fast before they've actually reconciled or built out their personal credit report. Another thing that entrepreneurs kind of put the cart before the horse with and make a huge mistake with is not having a properly structured business, right? Your business is not properly structured. You have a decent name, but then you don't have a business address, or you have a business address, but you don't have a business email address. And a lot of people are out here trying to quote unquote build an inordinate amount of wealth while at the same time being cheap. And so you have to be able to invest in your business, right? If a bank is going to give you $150,000, why wouldn't you go and invest in a virtual address? Yes, it costs you $150 a month. It costs you $200 a month, but it pales in comparison based on what you're going to acquire, right? And so that is one of the other places that entrepreneurs make a huge mistake in. Another thing entrepreneurs make a huge mistake in, and this is just by way of revelation that I've been receiving. I see a lot of entrepreneurs going into a lot of high risk industries, and those industries are high risk for a reason. For example, like trucking or like even real estate. These are spaces that you really need to be trained up in. You really need to be fully dedicated to. You really need to be locked in with. This is not just a quick get rich quick scheme, right? I had a property now where the property was being rented out, and the tenant began making so much more money that Section 8 would no longer pay, right? So the tenant ended up leaving, and now we're in a situation where we didn't have a tenant for some months, right? And now we're in the process of getting a new tenant, and then we had to go in and reinvest into the property because the HVAC system was acting up, and then the refrigerator broke down, and then so you really just got to be mature and stable when you're maneuvering these things. I'm not saying that there are bad aspects or bad industries to go in per se, but at the same time, you just need to be very careful. If you're an entrepreneur just starting out, I would encourage you to look at industries that have low overhead, high upside, high revenue, fast revenue that you don't have to go out and you got to do 10,000 hours of marketing before you get your first client. Get you something that people are desiring right now. People want right now, right? And so that's just one of my takeaways. I see a lot of entrepreneurs. I think a big mistake in the business is entrepreneurs going into a lot of high risk industries. There's so many ways to draw in revenue and to make money in today's world without having to be super high risk. And so those are the main things. The main things are not building out that personal credit profile, but then also not having a business structured properly. Phenomenal question. All right. Perfect. So next one. How much revenue should my business make before I apply for a line of credit? Phenomenal question. And so there's two schools of thought here. So if you have there's two types of lines of credit. There's a line of credit with a traditional bank, then there's a line of credit with a fintech company or fintech banks, if you will. And traditional lenders, they typically want you to have at least 2 years of experience, or 2 years in business at minimum. And then they want you to have tax returns. They want you to be able to show that you are making ample enough income. And so at bare minimum, 60,000 would be the number that I would give you at bare minimum. But that 60,000 is with you having super low expenses, with you having a decent savings, right? But on the other hand, when you start talking about fintechs, the benefit of a fintech, or the main difference is, a fintech will give you a line of credit prior to you even reaching that 2-year mark, right? So you only have to be in business for about 6 months to go with a fintech. When you go with a fintech, you're only in business for 6 months. At minimum, you want to be making anywhere between $10,000 to $15,000 a month, right? In some instances, you may find, some that will give you an approval at 7,000 to 8,000, but at bare minimum, you want to be in business you want to have a bare minimum income of about $10,000 to $15,000 a month. If you're able to do this, then you're now in a situation where you can go out and really garner a decent amount of funding. And so again, those are the numbers right there. On the traditional side, 60,000 a year, right? And then that's after you being in business for 2 years. The next one, you want to be anywhere between $10,000 to $15,000 a month, and you're only in business for 6 months. The other benefit to that too is that you do not have to have the perfect credit score. So your credit score, you can literally have a credit score of a 630 and get approved, right? You can have a credit score of a 630 and get approved. So though, yeah, that's the answer to that question. All right. What else we got here? All right. So the next one here. Is it best to start an LLC or S Corp when it comes to funding? So when it comes to funding, I've done all of my funding under an LLC. I've done Yeah. I see you in the chat. Yes, I've done all of mine in the LLC, but I also have friends who've gotten funding in an S corp as well. So the main thing is, that you have the revenue coming in, your business is properly structured. That's not going to make a huge difference. Again, if it makes dollars, it makes sense to the bank, right? So either way is perfectly fine. Next question. Jerron, I have not filed taxes in the last 3 years. Can I still get approved for funding? Incredible question. You can absolutely get approved for funding if you have not filed taxes. Now, for the record, I am not a CPA. I am not a licensed financial advisor. This information is based on my experience and my experience alone with me and my friends, family, clients, and people of my community. But with that being said, you can go out and you can get funding without tax returns. But the major key is that you make sure that you do not apply to products that will require you to have tax returns. This is one of the biggest mistakes that I see entrepreneurs make. Because you don't know what's needed, you go in, you apply. Not only do you get denied, but you get hit with a hard inquiry, which then lowers your credit 2 to 4 points. And if you do that 3, 4, 5, 6, 7, 8, 9, 10 times, then now you're sitting there looking like, why do I keep getting denied? And then I also have 35 inquiries now. And so, or I actually, my score has dropped 35 times or whatever the case may be, right? You want to make sure that you're in a situation where you understand where it is that you are applying to. So I'll give you guys a list now. When you start talking about a fintech business line of credit, they do not ask for tax returns. When you start talking about EIN-only business automotive loans, like 99 to 100% of the time, they are not going to ask for tax returns. When you start talking about the thing that we love to talk about, business credit cards, they do not ask for tax returns, right? And so these are the things you want to keep a lookout on for. But when you start talking about going through the SBA, they want their tax returns. When you start talking about traditional lines of credit from, your favorite banks, right? They want your tax returns. And so this is key to keep in mind. If you haven't filed them yet, I would advise you do. I would advise you connect with a knowledgeable CPA that can get you back on track. But again, if you want to go credit card, if you want to go fintech line of credit, if you want to go business auto loan, right? These institutions and these particular product niches, they do not require tax returns. So phenomenal question. All right, so our next question is, Jerron, what exactly do underwriters look for in my bank statements? The underwriter is looking at two things. They're looking at what's going in and what's coming out. Simple. They're looking at what's going in and what's coming out. What type of deposits do you have, right? You may be a business owner that has a $16,000 deposit one day, and then you may go blank for the next 2 weeks. And then you may have a $1,600 deposit, and then you may have a $500 deposit, and then you got a $5,700 deposit. They're looking at the consistency and the fluidity of the income coming into your bank statements. Now, to surmise that, they're looking at the average income that's coming in. Average. Right? Are you averaging 20 grand a month? Are you averaging 50 grand a month? Are you averaging 5 grand a month? They're looking at the average amount that is going in. The next thing that they're looking at is they're looking at expenses, right? Do you have expenses that supersede your income? Right? This would then cut into your ability to get approved for larger amounts or amounts at all, right? If they're going to your bank statement and they're seeing that you're making 20 grand a month, but you also got $19,000 in expenses, right? You're only profiting $1,000 a month. This is not saying that you won't get approved for anything, but it's going to be rough because you're only walking away with $1,000 every single month. And it's like, what business owner is really going to live? What business owner, what human being is really just going to live off of $1,000, right? And so they're looking at both of those things. They're looking at, man, how much income is coming in, and they're looking at how much income is going out. Another thing that they're looking at that I'll tell you really quick is they're looking at if you have any payments, and this ties into what's going out, but if you have any payments that you're paying on regarding judgments, right? Whether it's like child support, you're in the arrears on something, if you're paying alimony, if you have a judgment with the state, whatever you're paying in that realm, they're looking at that because that's also cutting into your debt to income ratio. That's something that we saw a lot in the mortgage industry, right? Like we got to calculate these things. There's certain things that's not going to be on your credit report, but at the end of the day, it's still an expense. Like if you got child support, or you got alimony, you paying money to the state, you got taxes that you owe, and you got those monthly payments going. That is something that the banks are going to look at as well. All right. Phenomenal question. All right. So this is one of my favorite questions in the whole wide world. I could write a book on it. I could do a whole seminar on it, just talking about inquiries. All right. So when we talk about inquiries, they say, Jerron, what amount of inquiries is too much, or what amount of inquiries would set me into the red and cause me to constantly get denied? The sweet spot of inquiries is 3. The number 3 is the sweet spot. Now, you got 3 credit bureaus. You got TransUnion, Equifax, and Experian. So you can technically have 3, 3, and 3, right? But 3 is the max number. You start 3, 4, 5. Once you start getting over that 4, 5 mark, then you start receiving rapid denials. And so if you guys don't know, inquiries remain on your credit report for 24 months. They remain on your credit report for 24 months. And so if you're somebody that has an inquiry and you applied somewhere 23 months ago, just wait 1 more month or wait 2 more months. That inquiry is going to be gone and you're going to see your credit score grow. You're going to see your credit score increase by a couple of points. But at the end of the day, bare minimum, you want to keep those inquiries around 2 to 3 to 4. By the time you get to 5, it gets rough for credit cards and for certain loans and for certain lines of credit. Now, one thing to keep in mind, when you are considering a home purchase, and you're considering a auto purchase, you're looking to purchase a car, finance a car, they do not care about inquiries, right? We've gotten people financed with cars that have had 45 inquiries. We've gotten people financed with cars that have had 15 inquiries. We've gotten people financed with houses and they've had 17 inquiries. It has never been a conversation, and it never will be. Like, never have I spoke to an underwriter or anybody on my mortgage team and said, oh man, how many inquiries do they have? They have way too many inquiries for us to give them for us to approve them for a house. It's not even in the conversation. They're talking about debt to income ratio. They're talking about tax returns. They're talking about underwriting. They're talking about, if this person has the ability to repay the loan. They don't care if you went out and applied 65 times. So that's something to keep in mind as well. And phenomenal question. All right. The next one we have. All right. So I want to say that we may have already discussed this, but someone asked, how does utilization affect business funding approvals? So utilization is super huge. Utilization affects it from the standpoint of this. If I come here and give you guys a visual breakdown of it, if you come here and let's say you have a $35,000 loan or $35,000 actual personal credit card, and you're utilizing $34,000 of this, then this right here then puts you at roughly 99.9% utilization. Now, your utilization makes up a huge component of your actual credit score. For those of you guys who haven't seen it yet, I did a video called the Credit Pie or the Personal Credit 101. It's called Watch This Before Funding. That's one of our highest watched videos right now. But when you start talking about your utilization, this can literally make or break your approval process. And this is one of the reasons why I always talk about the difference between allocating. You want to be able to allocate debt. You want to allocate debt and put debt in such a place where you say, hey, I know I'm in a situation right now where I have high credit card debt. Well, in that instance, how about go get a consolidation loan? How about go get a debt consolidation loan and put yourself in a situation where you now take a loan, pay that debt down, And remember, the loan and the actual credit card, they weigh differently on your credit report. And so, with that being said, by taking a loan and paying down that $35,000 or $34,000, that will put you in a better situation to increase your credit score and to overall lower the utilization, right? It's weighed differently from a credit card to an actual loan. Phenomenal question. All right, so another great question. Another great question. All right, so this one here, they asked Jerron, I hear you talk a lot about authorized user accounts. Can authorized user accounts help me get approved for business funding? The question to that is yes and no. All right, so an authorized user account is nothing more, nothing less than you getting added to somebody's credit card as a user of the card. Now, the benefit of it is you now get the opportunity to take on this person's credit history with that card. So if I have a mother, a father, a sister, a brother, a cousin, an auntie, a best friend, an auntie, a stepbrother, a stepfather, a god brother, god sister, I can go in and I can get added to one of their cards. Now, if they are great at money management, they pay their bills on time, they have a high limit, low balance, it makes sense for me to get on. Now, one of the things that you have to keep in mind, though, is this. As much as it helps with comparables, because they have a $30,000 limit and I now have a $30,000 limit because I was just added. As much as it helps with comparables, you cannot go all the way in and maximize your business credit and business funding experience if you do not have your own primary accounts. You want to have your own primaries, right? Your own primary meaning you went to the dealership and bought a car in your name and your name alone. You went to the mortgage company and you financed a home in your name and your name alone. You went to your credit union, you went to your bank, you went to your community bank, your regional bank, your national bank, and you got an actual loan on your own credit card, your own line of credit, your own personal loan. You did it on your own. Once you do that, it makes your profile stronger. This is why we say it's not all about the credit score, right? You can have a 750 or 800, but only have one trade line. So the credit score alone is not it, right? It's all about the comparables. It's about, being able to have a solid foundation. And so again, to answer your question, authorized user accounts do help with business funding approvals. However, if you only have authorized user accounts, you will not be successful in and of itself or for the long haul, right? You want to have both of them working for you together. But phenomenal question. All right. So we actually already went through that one. So another person asked, but what's the difference between a fintech line of credit and a traditional line? The primary difference is if you go with a fintech line of credit, a fintech line of credit is going to give you less haggle in underwriting. You can have a weaker credit score. You can have a 640 credit score, 630, 620 credit score. But as long as you are making $10, $15, $20,000 a month, you can get approved. And you only have to have a business for 6 months. Unlike a traditional line of credit, generally they want you to be in business for at least 2 years. So that's the primary difference. All right. Another phenomenal question. All right, Jerron, I've heard you talk about purchasing your Corvette in your business name, your TLX in your business name, as well as your E-Class Mercedes in your business name. Man, y'all been watching. All right. Do you think it is good for me to buy my next car in my business name? And if so, can I buy my next car in my business name without my personal credit? Wow, phenomenal question. So if you are in business and you're actively doing business, you're actively making money, I highly recommend you purchasing a vehicle under your business, obviously for not just for tax purposes and benefits, but to also build out your business credit profile. You never know what you might have to use your funding for or your business credit profile for in the near future. And the more trade lines and the more credit history you have under your business, the better. Now, when it comes to financing, under your utilizing your personal credit versus not utilizing your personal credit, it's all based upon how many trade lines you have. I think I actually talked about this yesterday. Wow, phenomenal question. So, all right, when I went in and I bought my TLX was the first vehicle that they gave me without utilizing a PG. So I was able to go in, I was able to get approved for a $50,000 loan, and they did not utilize my personal credit at all. However, I had 12 trade lines already under my business. And so I had pretty hefty trade lines as well. So $25,000, $50,000 business credit cards and lines of credit. And so they saw that I was managing it for ample enough time, and they felt I was worthy enough to go in and get that automotive loan, right, in the business name, just utilizing the EIN only. And so it's all based on how many trade lines you already have now. If you've been in business for quite some time and you already have trade lines, then you may be able to go in EIN only. But if not, even if you do a PG, then that's perfectly fine. Right. And so for example, with my Benz, I PG'd the Benz, right? Mercedes did not give me the opportunity to do EIN only. So every bank is different. Every finance company is different. But at the same time, regardless of whether it's PG or EIN or PG or non-PG, if it's under the business, it is still going to report to the business. And that is what you want overall for the long haul. So phenomenal question. And yeah, great question. All right. All right, next question. How many months should my business be open before applying for a business auto loan? So when you start talking about a business auto loan, it really depends on the industry that you're in. Now, you have some individuals out here who have businesses that actually rely heavily on transportation. So, for example, if you have a transportation company, if you have a plumbing company, a HVAC company, a construction company, any type of industrial company, a roofing company, your business relies on transportation. This is not something that you have an option to choose. Like, you need a vehicle. Your company needs transportation. You cannot maneuver or do business without transportation. And so with that being said, if you're just starting out right now and you have a business and you have a contract and you have revenue coming in, it really does not matter how long you've been in business to go and finance a vehicle under your business name. Now, if you have a business that is not as that doesn't rely as much on transportation, like let's say you have a digital business, right? You have a marketing firm, you are an infopreneur, you sell clothes, you are a barber, you're a cosmetologist. These vehicles, obviously everybody in the world needs transportation, but these vehicles are not as top heavy on transportation, as if they were like a landscaping company, right? Landscaping company, in order to get your lawnmower to somebody's house, you need a truck, right? And so with that being said, there's a difference for those businesses who are extremely dependent and relying on transportation. There is no time frame. You can start your business today and go to the bank. But again, the underwriting mainstream or the process with it is that you have to be able to prove that you can repay, whether that's through credit or through savings or through income or through a contract that you're working on. You have to be able to show and prove that you can repay that bank. Now, on the other hand, when you start talking about, a situation like myself, man, I would recommend being in business anywhere between 6 months, 6 to 7 months before going and financing it. But again, if you're utilizing PG, your time frame really doesn't matter as much. But I'm mainly talking about if somebody's looking to go out and get some EIN, you at least need to be in business for 6 months, and you need to be able to show that you too have the ability to repay. So phenomenal question. All right. Here we go. Let's see. All right, wow, we getting good, y'all. We getting good. All right. So, Jerron, in your opinion, what's most important, credit score or cash flow? I like that question. Y'all trying to be on here all day. All right, so what's most important, cash flow or credit? Man, I hate to be this person, but I gotta say both. Both are vitally important. I gotta say both, but if I had to pick one, see, I don't have as much context because they just sent me that question. I think it depends on what direction we're going in. But I'll give you the pros for both. So if I had to pick one, Oh, if I had to go with one, I'm gonna break down both of them. But cash would be more important to me. I need all the context. I don't have all the context, but cash flow would be more important to me, because if I have cash flow, then that's showing that I do have business moving. I do have active business. I have clients. I have contracts. I have customers, and with that, not only am I able to live and survive and thrive, but I'm also able to reinvest back into my credit to get my credit back up to par. Right. One of the things that I say is sometimes a lot of people focus on one or the other, where I think you should focus on both. And so cash flow, I love cash flow, man. The whole credit system cut down. You have a viable business. You have an active business is out here doing really good business and serving the people. I love that concept. Now, on the other hand, I love credit. I think credit is vitally important because, man, you can run out of cash, but if you manage it properly, you won't run out of credit. And so credit is vitally important as well, because depending on your business type, like if you are in government contracting, you have government contractors who are in spaces and in situations where, they have to go out and they have to fulfill payroll until they're paid, right? And sometimes they're paid on net 30 terms, net 60, but sometimes you may have to wait 90 days before you even get paid out on a contract. Well, if you got to wait 60 to 90 days before you get paid out on a contract, then where you going to go get the money? Right. So that is where the credit comes into play. It also comes into play when you start talking about things like real estate. You start talking about things like cars. These things have become so normal to us. But, I always say credit buys you time. Why does credit buy you time? Credit buys you time because if you were looking to buy a $500,000 or $600,000 house, or a house that costs $750,000, and you don't have the credit, or you don't have the cash, guess what? You go credit. Credit bought you time, because if you didn't have the credit, then you would have to save up $750,000, right? So it saved you time, right? If you are in your 20s, 30s, 40s, or 50s, and you was buying a $750,000 house and you were making $100,000 a year, it would take you the next 10, 15 years to save that type of money. So credit buys you time, right? So both are vitally important. Again, I think it just depends on the conversation and what your goal is. I don't know if I can definitively say that, one is, enormously better than the other. But they both have their benefits. They both have their perks. Again, just depending on the business or the industry that you're in. So great question. Okay, perfect. Next one. So, Jerron, I just got my LLC. How soon should I wait, or how soon should I actually go and apply for business funding? Phenomenal question. So, if you just got an LLC, I highly recommend waiting at least 30 to 60 days, letting the dust settle a little bit prior to going in and applying for funding. I've seen people go in and get approved in as early as 2 weeks. However, no one situation is the same, right? If you are somebody that has super strong credit, you are 850, you got 17 trade lines, and you got a perfect profile. You could go in same week, 2 weeks, but again, I would recommend waiting at least 30 to 60 days, let it settle in for a second, and then, kind of go from there. Now, again, the longer you have the LLC, the better. That is why you've probably heard people talking about the whole concept of shelf corporations, right? These are corporations that are old, or I'm sorry, not shelf corporations, Lord forgive me, aged corporations, aged corps, right? So people that have had LLCs for a long time, but they haven't really done anything with them, they're selling them, they're getting rid of them, they're consolidating, liquidating, etc. So you can go out and get you an LLC. Is it recommended on my end? Depends on the situation. It's not something that I'm super pressed about. Because I don't like to get intertwined or entangled in other people's as my wife would say, conundrums. I'm not mad at actually going out and just create my own business, right? I'm not that pressed for an age corp. It does help, but at the end of the day, your credit score in and of itself holds more weight than an age corp. Like, yeah, you can have a corporation that's been around or a business that's been around for 30 years, but if you got a 500 credit score, it don't mean nothing, right? If you got a uh, a 601 with 16 late payments, it don't mean nothing, right? So at the end of the day, the main focus in that regard would be your credit. But again, I would wait 30 to 60 days prior to actually going in and applying. Phenomenal question. Again. All right, so cool. All right, Jerron, what are the biggest underwriting red flags? Woo! All right, we're gonna have to go to the board for that. All right, so underwriting red flag. Good Lord, have mercy. All right, here we go. All right, so let's go ahead and paint this red. All right, so underwriting red flags. Your underwriting red flag is that you do not have a business address. And you talking about you make $260,000 a year. You do not have a business address and you've been in business for 4 years. You do not have a business address and you're talking about I want to get approved for $80,000, right? Well, Jerron, why is that a big deal? Because we now live in in this space now, especially after COVID, where a lot of people are working virtually and working from home. I understand that. But when you begin looking at your business, did you not know that people can look up your business online and figure out where you live if it's attached to your house, right? If you they could go look that up online, right? They can go see exactly where, because your address is attached to your LLC filings, right? To your business filings. They're attached to it. And so if you are going out and you haven't made the conscious investment and actually going out and getting a virtual address, then this puts you in a situation where you're now red. Like, it's a red flag for underwriters, because is this person really doing business? What type of business are they doing? Because I personally don't want nobody to just go online and figure out where I lay my head at, right? So red flag for them. Another thing that is a red flag that I see a lot of people do is they wait until the last minute. Let's just write last minute up here. Last minute. They wait until the last minute to apply for funding. Well, Jerron, what do you mean by the last minute? And how would they know that it's the last minute for me? They know it's the last minute for you because you got $30,000 credit card, you got a $20,000 credit card, and then you also have a $40,000 credit card, and every last one of them are maxed out. So you came and you applied for funding too late. This is a red flag, right? It's a red flag because, like, oh my God, this person is like one step away from falling completely. They're one step away from going bankrupt. They're one step away from garnering a late payment. They're one step away. They're one step away. I said they're one step away. And so, like, these are things that are red flags to banking institutions. Okay. Obviously, you come here, and another red flag for an institution is that you do not have a professional email address. Your business, you sell cookies, and your name is Mrs. Cookies at Gmail. Mrs. Cookies. You know the people love that sugar. You know the people love them chocolate chip cookies, baby. We're gonna have to go get us a professional email address, right? Like, it has to be a professional email address. These things are red flags. Another red flag is, in today's time, you don't have a digital footprint. Right? You don't have a digital footprint. It ain't gonna really be too many businesses out here right now that don't have a business website, right? These things are red flags that you want to be on the lookout for. You want to keep in mind of. They are red flags to the highest degree. All right, red flags to the absolute highest degree. All right, so next one we have here. All right, all right, all right. What else do we have? What else do we have? We didn't answer. We done went through a lot of questions, y'all. Okay, perfect. We got one more, y'all. We got one more. We got one more. Woo! All right, so I think this is a great one. I think this is a great one to leave off on. And man, someone asked, Jerron, why do profitable businesses get denied funding? Good Lord have mercy. Number one reason a profitable business would get denied funding would be their credit score and their credit profile, credit report as a whole. Again, as I mentioned to you guys before, everything is not just about a credit score. You can have a credit score, but have a weak credit profile. Okay. You can have a strong, a decent credit score, but you could have had a late payment with that institution. Right. And so, one of the things you want to keep in mind of, and I tell everybody this, if you had a bad payment experience with a bank, don't go back there. Because although you may have gotten your credit fixed and although you may have been reconciled and although you may have a 770 now, they still have internal records of that bad payment. So I would stay away from that bank by all means necessary. Another reason why an institution would go in, they're profitable, but they didn't get approved is because they have a industry or they are within an industry that the bank just doesn't like. Right? You have banks out here that don't like credit repair companies. You got banks out here that hate trucking companies. They don't like real estate companies, right? They don't like, cash heavy companies. They don't like anybody dealing with anything regarding gambling, right? There are companies like that. They just don't like that, right? And so with that being said, that right there is another reason why a profitable business, man, got denied, right? Another reason why that a profitable business could get denied is because they applied for the wrong thing. This business was profitable, but at the end of the day, they are already overexposed and already have 3 business loans out there, and they went and applied for another business loan, right? And the bank can see that. So again, business credit is like Tetris. It's like a puzzle. It's like I'm navigating through like this dynamically incredible maze. And so there are a few reasons why it's a very peculiar or interesting idea topic that, hey, I can be profitable in business and still get denied. But like, yeah, I can be profitable in business and still get denied. This is why it's imperative that you have the education. I always refer to this. This is our main man, King Solomon. He said, man, in all that getting, get understanding. You can get information, but you need to get understanding on the information. And this is why I recommend consulting, talking to somebody who is quote unquote expert in the space, whether it's me, somebody else. But if it is me, we do offer that. You guys don't know, before we jump, we started posterity.ai. It's absolutely free for the first 7 days for entrepreneurs all over the country. And the software is something that man was birthed out of me, and man, always helping clients through workshops, seminars, boot camps, but then also actually going and getting results for myself as well as clients as well. So we wanted to democratize the entire industry of business credit, and so we created posterity.ai that helps entrepreneurs maximize their funding. But in addition to that, if you are watching this right now and you found value in this, we just ask that you like, share, subscribe, comment, say something. Let me know you're alive, man. And man, if you guys need any assistance regarding your business funding journey, maximizing your funding, you need a line of credit card, business loan. Man, obviously on here we have, man, I'm gonna make up the word, the freest information out here. Man, this is multi-million dollar information out here that you guys are getting, that you guys have access to. So, man, if you know anybody that could utilize this information, man, just like, share, subscribe, and comment. And man, let us know if you guys need anything. You can reach out to us on all platforms. Directly. My email is Jerron at JerronTyler.com, as well as jtyler at posterity.ai. So, man, if you guys need anything, don't hesitate to give us a shout. Love you all. Have a blessed one on purpose. And, man, we might go live again tomorrow. I got an idea on this thing, man. Talk about business funding mania. Business funding mania for the next 24 hours, man. We're going to do it. Business funding mania for 24 hours, laying out the business credit and the funding that you need, man. In addition, we also got the access to the mortgages as well, man. We do mortgages. We've partnered with a mortgage company, man, that could get the job done anywhere in the country. Man, you guys have a blessed one on purpose. I will talk to you soon. Jerron Tyler is signing out. Ah! I love y'all, man. Have a blessed one on purpose.